What was the organic sales growth in this quarter just ended?
It was 1%.
1%. So for the year, you were hoping in past years you've been as high as 3 to 5 at different times, right? We always, I mean, we have you on all the time. I remember that. Yeah.
Good memory. The markets that we're competing in, if you look at the U.S., for example, the last couple of months has slowed from what used to be about, more recently, about 4% growth down to 1%. The same kind of dynamic in Europe. So that reflects the consumer uncertainty that I was talking about, and it's reflected obviously in our results. Still growth, but a little bit lower, and reflected in our outlook as well.
Last time you were on, China was getting better, and it had been a problem spot, and now actually, I think your CFO last time said, I don't think, I want to be clear, I don't think China's out of the woods. Little did we know. So how important is China, and what's the outlook there?
China's our second largest market in both sales and profits, so it's very important. Again, quarter to quarter, we saw a sequential improvement, albeit modest. So last quarter, we were down by 3% on the top line. This quarter, we're down by 2%. But some important points of growth within that. Our baby diaper business, for instance, is growing at double digits in a market that's declining due to birth rates. SK2, which has been a challenge for us, grew double digits in the quarter in China as well. So things are coming around, just as Andre indicated. But you know, it's going to take a while, and the path forward will be bumpy.
And I think one of your competitors, it's much smaller, obviously, but Kimberly-Clark talking about tit-for-tat tariffs, which could drive up costs of a lot of different things. They were mentioning Kleenex in this case. But what about that?
Well, we're still sorting through, as is the administration, exactly what the tariff rates are going to be. And then what the potential retaliatory tariff rates will be. You know, for us, we manufacture most of our products proximate to consumption. So the issue isn't profound, but it will cause a challenge, and we're working to understand what the magnitude of that challenge will be and how we'll offset that. You know, it's because we produce close to where our products are consumed. We've been investing a lot of capital in manufacturing in the U.S., which puts us in a decent position. If you go all the way back to 2017, when the Tax Reform Act was passed and gave us lower rates, which increased the attractiveness of investment in the U.S., we've spent $10 billion in capital, manufacturing capital. We've employed an additional 6,000 people. Average wage at the starting level has increased by 30%. And importantly, we pay more taxes today to the U.S. than we did in 2017, about $2.2 billion the last couple of years versus $1.6 billion pre-reform. So when we can get policies that make American companies competitive, pretty amazing things happen. During that period of time, on a global basis, the company increased sales by $17 billion, 85th percentile in the S&P 500. We increased profit by $5 billion, 93rd percentile in the S&P 500. We grew market cap by $200 billion, which is more than our competitors, most of whom are foreign domiciled, have created over their entire 1- and 2-century histories as a company. So we need to continue to work to ensure we have policies that allow American companies to be competitive. That's both tariffs and taxes, and I think we're headed. We'll get to the right place.
When the dollar's strong, we don't. You know, you're like, yeah, well, the dollar's strong. When it's weak, it doesn't really help that much either, does it, or does it? It's just like a.
The dollar is meaningful, and as you know, as was discussed in your last discussion about IBM. It is a help recently, and we'll see where that settles out. We're just beginning our forecasting process for our next fiscal year, which begins in July. are lots of moving parts, but we'll sort through that, again, with a priority being on maintained investment in innovation and demand creation, which puts us in the best spot in the near term and in the long term as economies recover and consumer confidence is rebuilt.
Hey, John, how do you handle the messaging coming out of the White House when it comes to tariffs these days? I mean, you said you're just now getting ready and getting these plans set for next year. How do you plan? How do you put things into play for that?
Well, we're the administration has been and the Hill have both been very open to dialogue, to two-way dialogue, which gives us a better opportunity to understand where things are headed. So we're spending a fair amount of time on that. And we're going through all of the options that we have to make this as painless for consumers as possible. There will likely be pricing. Tariffs are inherently inflationary. But we're also looking at sourcing options and even the where-to-play choices within our portfolio. So all of that's on the table. You know, our job isn't to design policy. Our job is to optimize the business outcome against the backdrop of that policy. So a lot of it's just working, as you know, day by day to understand what the landscape looks like today.
You just said that there likely will be price increases that consumers will face. How high do you think that will be, and when will we start to see that it's on store shelves?
I don't know. It's obviously different for different products, and I'm not going to venture into other industries. But in our case, any pricing that needs to occur will occur next fiscal year.